Hey everyone, happy Thursday, May 7th. It's about a little bit before noon on the West Coast, and it's time for another market update. Well, shockingly, the markets are still very focused on the war with Iran. I haven't, renewed optimism in markets. That I didn't have a question mark there until a few minutes ago. There was renewed optimism in the markets. There's talk of, I think, a 14-piece plan that they think they're going to sign between, Iran and the United States. However, something came out a little bit ago about how Iran is now kind of formally taking steps to take control of that straits for after the war. Previously to the war, it was kind of free for any ship to go through that strait, but now they kind of view it as a spoil of war. And now that they have control of it, they don't want to give up control of it and want to kind of control the traffic, the shipping traffic that goes through that strait. And that has caused the markets to sell off a little bit. That obviously would make that affects oil prices, that affects inflation, that affects kind of how everybody is viewing this whole situation. So that just came out. So I added that question mark because now things kind of flipped. And in my industry, for my company, I'll get an alert if mortgage rates are about to go up. So we call it a lock alert. And I got one of those a little bit ago because the markets had flipped. Bad things had come out, meaning that news about the Straits. And now things were sliding in the wrong direction. So again, there was some optimism, and there will be optimism, or even more optimism, if that deal gets set in place. But for now, it's really hard to take anything. You have to kind of take everything that comes out with a grain of salt because it just seems like it's kind of a whipsaw. We'll get some positive news and some negative news, and the markets react both ways. But I guess that's just the way the world is these days with instant information. Next thing. So this week is actually Jobs Week. Very important week generally. If a war wasn't kind of overshadowing things, but this is the week where we get most of the major job reports that the markets are looking at to kind of get an idea of how strong the labor market's doing. So the first thing we got earlier this week was the March JOLTS. So that's job openings. So that kind of tries to measure how many job openings are out there for people to apply for. Like we've talked about before, some of the issues with that report are that it tends to pick up on multiple postings online and things like that. So kind of have to look at those numbers, knowing that maybe it's a little inflated, but that came out at about 6.866 million job openings. That's about expectations. It's a little bit lower than it had been. So that's anything that really makes the labor market look weaker is something that it's going to be a little bit of a positive for mortgage rates. Because again, like we talked about, we don't want people to lose their jobs. We need people to have jobs to buy homes. However, the way the Fed's looking at things is, they need to cut rates to stimulate the economy, and that tends to be when we're in a recession, when there's job loss, things like that. So if the economy looks like it's doing great, the Fed is less likely to cut their rates, and that's something that we would like in order to see mortgage rates come down and stimulate more activity in the market. So again, don't want people to lose their jobs, but unfortunately, we're going to have to show some, at least some weakness on paper in order for the Fed to follow through with rate cuts. The next thing we got this week was the April ADP. So this is an important one. This is from private payrolls, and it came out at 109,000 job creations. So more than expected. Pretty strong report, not as strong as some we've seen in the past, but as you can kind of see by that table, that ADP has been lower. So this is one of the higher numbers in quite a while. So again, like we just talked about, anything that makes the job market look stronger is generally not going to be good for mortgage rates because the Fed can look at this number and other numbers out there upcoming and say, hey, we don't have to cut rates. The economy is doing fine. The labor market's doing fine. And so this number wasn't necessarily a huge negative for rates or the markets because, everything going on with the war and stuff. But again, not something we generally want to see. We'd rather have it come in lower than expected and show that, hey, Fed, you're making some problems by keeping your rate for too high for too long, and you need to cut your rates. So those two reports came out, and then we're also going to get BLS jobs report later this week, which we'll talk about in a second. March new home sales. So we got this. This is new home sales, so brand new builds. This was actually for February. They came out with February and March numbers. They caught up finally after the shutdown, and this came in month over month up 7.4%. Year over year they're up 3.3%. The median sales price dropped by 5.3%. That's what I kind of wanted to talk about. In the mainstream media, let's say CNBC, things like that, they made a big deal about that and how builders are having to cut prices in order to get people to buy their houses, and that's why that median sales price went down. However, if you look a little closer at the data, it looks like more about it is builders are building more low cost houses, and that will also affect the median sales price and make it come down. So that's more. It seems like it's more of an indication, not necessarily of builders having to cut prices to sell their inventory. It's more about builders being aware that lower price inventory is more in demand, which it has been, and to build more low cost homes, which I'm all for. The more to get housing out there for people, the better. And anything that makes housing more attainable is a good thing. So again, just be aware that anything you see in mainstream media sometimes is going to have sensationalist, just like any type of news, whether it's political, sports, or financial news. They want clicks, they want eyeballs, and so it tends to gravitate towards one, a big negative or a big positive. And this is something that they're trying to paint as a negative, and it seems more of just some builders being smart about how they're doing things. Next thing, average 30-year conventional. So where does that leave us? Last week we were at 6.45. Earlier today we were at 6.4, so it come down a little bit. Now it ticked up with that news about the straight up to 6.44%. So basically no change. Still, getting further away from 6 than that we got down to, but obviously lower than the highs that we had over the last couple of years. But like to see it start ticking back down towards 6. Next thing, so important dates upcoming. Like I mentioned, we have the BLS jobs report comes out tomorrow. That's the big one. That's where we get the unemployment rate from and things like that. Right now, they're expecting to see about, I think, 60,000 jobs created and for unemployment to stay at 4.3%. So anything either higher than that or lower than that could have an effect on the markets. Again, depending on what's going on in war or with news about the war. BLS jobs report could come out crazy, and some other political news could break as far as a war in the Strait and in oil and all that kind of stuff, and completely overshadow those numbers. But in general, if we have a calm day in other news, that BLS jobs report, if it comes out higher or lower, that could have an effect on the markets. And again, like we talked about, we want those numbers to come in lower because we want the Fed to cut rates. And then after that, we get a couple of inflation reports in the month of May, and then the Fed doesn't meet again until mid-June. So we'll see another BLS jobs report and probably another CPI inflation report for that would be the month of May's reports before the Fed meets again in June. Right now, I think it's a 5% chance they think the markets that the Fed would cut rates. So right now, it looks like we're kind of stuck with the Fed rate we're at for now. But again, that could change based on a lot of things, based on what happens with the war, what happens in inflation, what happens in jobs. Aliens can invade. You never know. Crazy things can happen, like we've all learned over the last couple of years. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.